This is Eric Muathe with Muathe.com with the weekend market analysis for August 8th, August 9th, 2020. All is well. Alright, let's take a look here with about 15 minutes to go before the end of the session, which is Friday's session and also end of the week. We can see the market coming off the lows of the session. Let's begin by taking a look at the Nasdaq, which is down about 1%, give or take. Alright, we begin here with the monthly chart for the Nasdaq, and I think, as I've been stating, this is the key in my opinion. As long as the Nasdaq continues to defend and hold above RSI 69.1, then the market net should remain stable to outright bullish. In my opinion, this remains the key in the market. And frankly, it also means that as long as the Nasdaq is holding above this threshold, holding above RSI 69.1 on the monthly, then it makes sense to be playing momentum breakout ideas. This is just a characteristic of a strong market as long as the RSI stays above 69.1. And we can see there was also another great period where the market was definitely favoring momentum breakout ideas. It was this phase, and that phase also happens to coincide with the RSI holding above 69.1. There's also another phase here, 2013 to mid 2015, when the market was net bullish, and that was also another ideal area to be playing momentum breakout ideas. And all of those, we can see the RSI held above the magic number, the RSI 69.1 threshold. So without knowing, without being an insider, we can see, we can use this as a guide that right now, because the market is continuing to hold the Nasdaq above RSI 69.1, we have to assume that net, as long as that's the case, this market is again sideways at worst. Pullbacks are gonna be shallow, and ultimately the market is gonna favor a move to fresh, higher all-time highs. And because this number is fixed, we also know that if the market was to rotate and drop below RSI 69.1, just like it did here, then that would be an indication of a market that wants to go down. Just like we saw a pullback below 69.1 here, which is this period we had a pullback in late 2018. We have a move below 69.1 here, and we got a sideways to down market for late 2015, early 2016. So it's a simple level, but yet very powerful as the most simplest guide to how to approach a market. And especially if the last thing you want to do is miss out on bullish market momentum. Now, keeping that RSI level in mind, we also need to understand that right now the Nasdaq on its weekly chart, even with the pullback on Friday's session, we can see that the RSI on the weekly continues to trade above 69.1. And as long as that's the case, we have no option but to favor the possibility of higher prices, just as the market was very strong in late 2000 or 2019 into early or mid-February. So this was a very desirable bullish period right here. And so we have to be sensitive and understand that as long as the RSI is above 69.1, we have to assume, we have to hold our nose and assume that the market is going to be manipulated to the upside. And of course, we remain vigilant to the possibility of a reversal based on RSI 69.1 rejection. If it happens, when it happens, as you can see, these were areas of the market where the market was top heavy, and the market would go on to reverse lower. Why? Because RSI 69.1 became a rejection area, and the markets did pull back. And by the way, from a breakout perspective, as long as the Nasdaq is holding this weekly closing high, then we are continuing to see a strong breakout continuation. In fact, this is going to be week number 2 of that breakout, and that breakout is above 10,617.44. As long as the Nasdaq is above that level, this breakout remains intact. It's a green flag for higher prices. At some point in the future down the road, a break below this price would be a red flag. But for now, we continue tracking that RSI 69.1 level. As long as the Nasdaq is holding above that, expect an improvement to fresh all-time highs. If we take a look at the daily, we can see what we can call a slight divergence. It's not the worst. An improvement to all-time highs. The RSI showing a decline. The RSI showing daily RSI 69.1 rejection with uniform activity. But as I've been stating for a while, it's only when we break major RSI lows that the market can anticipate lower prices. So this would have to break. This line here connecting RSI lows would have to break before we can see any significant push to the downside. That would be similar in a sense to this break. It is this break that ultimately brought the market lower in February. So until we see something similar, as long as this line is holding, then the market continues to be stable to bullish. It is also, from a generic standpoint, we can see as long as we are holding above an upward sloping 50-day moving average, this market continues to be stable. Remember, we had to break that 50-day moving average. Here, we broke below the 50-day moving average, and that is what invited the possibility of lower prices. So, just based on this, yes, there's a negative divergence on the daily. There's RSI 69.1 uniform activity rejection, but we haven't seen any major break lower. Taking a look at the Dow as it comes off the lows of the session and is now pretty much net closing at the highs of the week, we can see there's a level we can continue watching here, which is the recent weekly closing high, and the market is currently trading above that level. So we can see from a weekly standpoint, this is also another level to watch for guidance. That level is 27110.98, and it is the weekly closing high from June. As long as the Dow is holding above that level, this is a successful breakout and could be inviting higher prices. Of course, we can also note that we have the crossover of the moving averages, which is always a bullish thing. If it can sustain that crossover, just like we had a bullish crossover here, net, the market would over time drift higher. Remember, this is a weekly chart, so it's gonna play out over many weeks. Now, if the market cannot hold that level, then a break and a move below this level on a weekly basis could invite lower prices. But let's not get ahead of ourselves. The market in front of us is breaking out as far as the Dow is concerned. Let's give the Dow the benefit of the doubt. Now, I've been talking about this line here on the weekly as being a potential trap zone, and that line is still within potential for resistance. In other words, the RSI would have to hold above this line, and this line, if you don't understand the uniformity concept, is where we got the break, a major break, which is this level here. And of course, we know what happened. The market would plunge after that. Remember those 2,000 point down days? Well, that's what happened after this break right here. So that RSI break point has been tested before, which gave us this high. And so, again, the market needs to hold above this level if the Dow is going to push higher. resistance at this level on a week-to-week basis. If the market starts drifting lower from this RSI level, then it means that there's going to be a failure of the price breakout, and that failure is going to be inviting lower prices. Put in a simple way, the market needs to hold above this price as far as the Dow is concerned if the bulls are to continue pushing the market higher. And we can see the market just closed. These are the closing numbers, or close to it, as things are settling out. Right there, market coming off the highs of the session. If you compare the weekly chart for the S&P 500, we can see the S&P 500 is well advanced from its breakout level. And so it would make sense for the Dow to also continue higher. Now keep in mind, we also had a crossover here of the moving averages, and things have been drifting, albeit slowly, but here is the market pretty much closing at the highs of the session for the week. Now, in my opinion, to be honest, it's a given, almost, that the market is going to be at new highs by the time we go into a fresh or a new public holiday. So the next public holiday is going to be Labor Day, September 7th. Expect your markets to be trading at all-time highs by then. At least that's how they've been doing it over the last couple of years, as manipulation has become rampant. If we take a look at the following, let's call it global charts, and we can see here the VT, which tracks global markets as a whole. We can see here that the total global market across the globe, there is some type of potential resistance I've been talking about on the weekly on the RSI, which is this level. It's a level we need to watch for guidance, because if this ends up being resistance, then a pullback is going to play out from current levels. And if the market can continue adding above the red line, then we are going to have to take out recent all-time highs right here. So that's a possibility if the RSI can move above this level. So all of these charts are pretty much showing the same thing. You can see the emerging market EEM, also similar potential for resistance on the weekly. It is this line here based on my uniformity method. And now we can use this based off these highs and then draw a line from there. And we can see that this is where we are trading. Above the line is what the bulls want to see. Resistance and coiling back below the red line is what the bears would want to see to signify the beginning of a pullback. If we take a look at another chart, the ACWI, which is tracking again global markets, just another variation of this, we see the same line similar to that of the Dow. Remember, the Dow has a similar RSI chart, and so the market would have to stay above this line here. Otherwise, failure to hold above that line is going to be a reason for a pullback. Take a look at the Canadian market. The same line I've been talking about for weeks is still in play. It is this line here. This was the major break line, and the market has come back to test that RSI level. Above this area is exactly what the bulls want to see. Resistance around here could be and could set the stage for what could be a pullback. So right now we ended the week exactly on that level. So it remains to be seen whether we begin the new week with a drop and a resistance, or if the market can climb above this RSI level and continue adding to its current highs over the last couple of weeks and months. If you take a look at the Indian market by way of the Nifty, we can draw a simple line here, go back to the break of 2019. Of these highs here, we get a shallow pullback right here. Now take that break point, use the uniformity method, and you can see this has been a decent guide. Above the red line, as we see here, the market has been trending to new highs, while resistance on this line has led to pullbacks. So we are trading exactly on the line. The question is, are we going to continue above the red line, or is the red line going to be resistance, signaling the next swing trade to be to the downside? And since we're exactly on the line, the new week should give us some new information. A quick look at the Bank Nifty, again on the weekly. To be consistent with the other charts, we can see that this is where it broke down on the RSI, leading to this massive drop, huge drop. And now we can see that this was tested about 2 weeks ago, and the market did show resistance. So as long as we are trading below RSI 50, net, this is a sideways to down market. The only way to repair this chart is for the RSI to move back above 50. So right now we are trading below that. It's a market that is net, in my opinion, sideways to a potential for even lower prices. Again, to correct this, the RSI needs to hold above RSI 50. As we can see here, this is holding above 50. Net, market was higher. Holding above 50. Net, market was higher. As far as gold is concerned and the metals, yes, there was a pullback in gold on Friday, but just remember that as long as the RSI continues to hold above 69.1 on all of the time frames, pretty much the major time frames, the 4-hourly is above 69.1. Take a look at the daily. As we observed, as long as the daily continues to hold above RSI 69.1, then net, this continues to be a stable to bullish market. As long as the weekly continues to hold above 69.1, net, gold should continue being sideways to higher. And again, net, as long as the monthly chart, just like we see with the Nasdaq, as long as the monthly continues to hold above 69.1, expect this market, yes, to have pullbacks, but as long as it can defend that 69.1 threshold, the metals are going to be sideways at worst, bullish at best. And if you had used that simple guide, this would have kept you in the market from about March of this year during this breakout right here. This monthly breakout right there. So from a timing perspective, as far as gold is concerned, this was a key entry because of the breakout. It also coincided nicely with the RSI moving above 69.1. So from a timing perspective, that was the best, most recent entry level as far as a quality long-term buy signal is concerned. And again, the reason why that was a good breakout is because that breakout in April does meet the minimum requirements, or did meet the minimum requirements for the ultimate Muathe breakout. As you can see here, MACDs were moving to 3-year highs, and the RSI was, as we've seen, holding above 69.1. That is a classic ultimate Muathe breakout. And you'll find some information, if I don't forget to put a link, in the description of this video. And one thing we can see that yes, there was a breakout, a good breakout on a monthly basis, but really the most recent momentum has come somewhere from about June. That's where we start seeing this pickup as far as price for GLD and gold is concerned. In fact, if we take a look at the weekly, we can see that the breakout somewhere around here, there was a sideways movement in gold, and it's in June that it finally clears that level. And from a momentum perspective, we see that we've seen this acceleration in price as far as that breakout and momentum is concerned. So which brings us to this breakout here sometime in June of this year. And I just happened to look, when was the last time we had a breakout alert for paid Muathe.com subscribers, and it looks like that was again June 11th. And you can see the buy point was at when it moved above 163.93, which is the breakout I'm talking about, from about this range here. The sideways action and then there's a breakout right there. So in terms of timing, not too shabby. And I should also say, as long as SLV, the silver ETF, is holding above 69. Even with pullbacks, this market continues to be stable to bullish, which is the metals. We see GDX also pulling back off the highs, but the key is whether or not it holds above 69.1. As we know, anything above 69.1 is exactly what the bulls want to see. Yes, you're going to get pullbacks. That's fine. It's only when we crack below 69.1 that the bulls can start seeing some traction to the downside. Right now, the RSI is trading in the lower 70s. Momentum net continues to be stable to bullish. Paid subscribers to Muathe.com are aware of my analysis as far as Bitcoin is concerned, so I'll keep this very simple. If we take a look at the weekly chart for BTC, right now trading at 11,554, we can see that the line I've been drawing, which is right here, is still in play. And again, above the line, as I've discussed this week for paid subscribers, that will be bullish. Resistance on this line on a week-to-week basis, then this will be a stall point as far as Bitcoin and the cryptos are concerned. That's it for now. I'll keep you posted in the new week. Eric Muathe with Muathe.com. Let's take a look at how the market closed in the US. Those are the closing numbers. And this is the live trading for the cryptos. Once again, Eric Muathe, Muathe.com. Love and light, light and love. Namaste.